Welcome to another stock investment analysis video. In today's video, I will be giving you an update of my dividend growth portfolio. I will show you the stocks I hold, how much I earn in dividends, and which stocks I've been buying and selling. I also discuss my future plans for my portfolio and my progress toward my investment goals. I've made several significant changes to my portfolio this month which I want to highlight. I hope this video will give you some ideas to consider and provide some motivation for your own dividend growth journey and towards financial independence. If you enjoyed this video or find it helpful, please hit the like button to get this video out to more people who are interested. Also, feel free to subscribe if you would like to see my future videos. And let's get started. First, let's see how I am doing in relationship to my dividend goals. If you've watched my earlier portfolio videos, you know that I like to compare my current dividend income to the median household income in other countries. Take a look here, for example. You can see that, according to this data, the median household income in the Philippines is $2,401 per year. That means that if I am earning $2,401 in dividend income every year, I could retire tomorrow to the Philippines, never work another day in my life, and live at the same quality of life as most households in that country. That doesn't mean that I'm going to move to the Philippines or any of the countries necessarily. However, I think it is a very cool way to look at dividends. Instead of simply dreaming of what I could do with my dividends someday when I'm receiving more, I want to look at what they could do for me right now. On the screen are the median household incomes ranked by country. The darker sort of turquoise blue countries are those that I can already retire to right now based on my dividend income of $11,852 per year. The light blue countries are the countries which my dividend income falls below the median income. In my last video, I hit the milestone of Russia. This week, I am closing in on my next goal of Iran. If I can raise my annual dividend income by $192 by next month, I will be able to cross Iran off my list for my next dividend portfolio video. If I did that, it would also mean that I had officially hit $12,000 per year in dividends, which means over $1,000 per month. If you want to take a look at the numbers for these countries yourself, feel free to pause the video here, or you can click the link for this in the description of this video and see the data for yourself. Take a look at this map here. This is another way of looking at that same table. All the countries in red are the places I can retire on my current dividends. The countries in gray are those places that I hope to someday cross off my list. Some of these countries like Switzerland, the United States, Sweden, or Australia are still many years away from me, but I'm determined to get there and I like the goal that this gives me. I also like to compare my dividends to my current living expenses. This is a chart I have not shown you in my prior videos, but which you might find useful or interesting as something that you can do for yourself. On the top in blue, you can see my average monthly dividend income of just under $990. Below that, you can see some of my expenses. The first category is my electric bill. It is very hot this time of year where I live, so my air conditioning has been running a lot in my house. My electric bill was $217 this last month. My water bill was $100, and you can see that next in red. In this tiny sliver in the next category, I only spent $30 on gas for the home, given that this is not used very much when it's hot outside. The next tiny sliver in purple is my monthly auto insurance price. After that, in light blue, we have my gasoline cost. In the last month, I've only spent $30 in gasoline, mostly because I haven't been traveling as much as I used to. In orange is $120 for internet and cable. In dark blue, we have $68 for my phone bill, followed by $60 for home insurance, $400 for groceries in green, and finally $900 for my mortgage. My point in showing you this is not so much to really show you that I spend this much on my expenses, but to show how my dividends line up. You can see my dividends are currently covering electricity, water, gas, auto insurance, internet and cable, phone service, home insurance, and almost all my groceries. Those expenses combined are $1,058. That's only about $70 more than my current monthly dividends. When I raise it by $70, I'll be able to cover all of my monthly expenses except mortgage. That, of course, is going to be a much longer goal. This chart shows you my monthly dividend income. The tiny blue bars are my dividend income in 2018. The red bars are my 2019 monthly dividend income. The lime green is 2020. This month is a huge month for me. For some time, I have been so close to getting over $1,000 in dividends in a single month. Back in March, I received almost $870. In May, I barely missed it with $991. I then barely missed it the next month at about $983. This month in August, however, I not only broke the $1,000 mark, but I flew past it. I received $1,416.69. Next month will be quite a bit lower, but I'm still very excited to see this. This month was actually only about $540 short of all my monthly bills, including both groceries and mortgage. That's just one step closer to my goal of financial freedom. Another way of looking at my dividends is looking forward at how much I'll make in the next year each month. Based on my current investments, I should receive $11,825. That's a decent increase of about $65 from my July projections of $11,787. One thing I like about combining the entire year together is it smooths out those quarterly distributions, which can be choppy, and shows the true growth of the portfolio. It only goes one direction, and I love to see that. Breaking down my dividends, I am receiving $32.47 every single day from dividends, 365 days per year. That's $1.35 every hour, day and night, for all 8,760 hours of the year. At the bottom, you can see I calculated work days and work hours in minutes. What that means is if my dividend income was for a job and I worked 5 days per week, I would receive over $45 per day for this work. Of course, my work for my dividend portfolio is absolutely nothing. I can sit back and let the dividends come. My hourly wage for my 8-hour faux workday would be $5.70. That might not be a great hourly rate, but I give myself monthly raises and never work, so I guess I can't really complain. This calendar view from the app Div Tracker shows you each of the dividend payments I received in August. On the 3rd, we had General Mills and Bristol-Myers Squibb. On the 7th, we had NHI. On the 13th, we had Apple. On the 14th, I had 4 payout, and I'm showing them to you here. They were AbbVie, Main Street Capital, Magellan Midstream Partners, and Realty Income Corporation. On the 17th, we had Stag. On the 19th, we had Energy Transfer. And on the 21st, we had Starbucks. And on the 31st, we had Arbor and Gain. Arbor also paid a dividend last month, so it was great getting those back to back. As a bit of news, 3 of my holdings increased their dividends. Target increased their dividends by 3%, Arbor raised their dividends by 3.3%, and Enbridge raised their dividends by 6.3%. When I do these videos, everyone always wants to know how much I've invested. I have investments in 3 separate portfolios. One is my dividend portfolio, which I'm showing to you here. However, I also have an S&P 500 fund portfolio, which is about the same size as my dividend portfolio. I also have a small growth portfolio, which does not pay dividends. In case you don't want to add up the numbers for each of these positions, it is $166,579.65. You can see my biggest 3 positions in order are Prudential, AbbVie, and Energy Transfer. Bristol-Myers, Geo, Main Street, and Broadcom are also major positions. So what changes did I make this month? First, as you may have guessed after watching my video on Comcast, Verizon, AT&T, and T-Mobile, I sold my small Verizon and AT&T positions. If you want a detailed reason for why, check out my video that I made a couple weeks ago. In general though, the biggest reason I sold them was because I want to focus on more growth in this portfolio. Neither of those companies have shown the share price or dividend growth I want to move towards. Another very small position I sold was Dominion. I liked Dominion as a utility when I originally bought it. Of the utilities, it had one of the fastest growing dividend rates. From 2011 to 2020, it had a dividend compound annual growth rate of 8%. For a utility, that's pretty solid. Although I think Dominion will continue to be a good company and they have announced their intention to buy back about $3 billion in stock, it is not heading in the direction I want my portfolio to, given that they will be cutting their dividend in the 4th quarter of 2020 and their earnings per share guidance has significantly been reduced. I'm looking for dividend growers. Dominion no longer fits with the focus of this portfolio. In addition, I'm also trying to cut down a few of my positions in my portfolio over the next few months so I have a more manageable number. I don't like the number of positions in my portfolio currently, and I'd like to have a smaller, more concentrated portfolio. With the money I received from selling those stocks, and with additional money which I contributed to my portfolio, and with the dividends I received this month, I bought small amounts of Energy Transfer, AbbVie, and Prudential. I also added 2 new positions, which focus more heavily on the share price appreciation and dividend growth I want my portfolio to more strongly focus on. Those 2 companies are Lockheed Martin and L3Harris Technologies. I will have a future video on these 2 companies as well as Raytheon and General Dynamics. If you want to see that video, make sure you subscribe so you don't miss it. Real quick, however, I will show you a couple things which make me excited about each of these 2 stocks. First, I will show you the past performance. We are looking at L3Harris Technologies' history. They have a 20-year dividend compound annual growth rate of 20.6%. That's pretty amazing for such a long timeline. They have only had 3 years since 2003 with single-digit dividend growth. Also look at total growth compared to the S&P 500. The S&P 500 grew at 5.9% annually during this period. L3Harris grew at 14.2%. The total returns for L3Harris were almost $139,000 based on an initial $10,000 investment, compared to only $31,000 for the S&P 500. For Lockheed Martin, we also see similarly impressive numbers. They have a 17.2% dividend compound annual growth rate, and they've only had 2 years of single-digit dividend growth since 2003, although notably they are the most recent 2 years. The yield on cost for those who invested 20 years ago is now an amazing 26%. Their 20-year total return is also over 14%. There is far more to what I see in these companies, but if you want to learn more, keep watching for the next video in which I compare the best defense stock companies. What are your dividend goals, and what are some of the best dividend stocks out there that you are buying? Leave your thoughts in the comments below for this video. I want to give a special thanks to my amazing channel members Chester, Clownin' Around, Antonio, Fui, Sarah, James, Peter, Steve, and Angie. Your support means so much to me. If others would like to join, the join button is at the bottom of the video right next to the subscribe and like buttons. I look forward to hearing from you. Thank you for watching, and as always, good luck with your investing.